Hi, Assalamualaikum, and very good morning. Okay, today we will continue our lesson. I will explain the other three of continuation pattern. As last class, we already discussed continuation patterns for flag, pennant, and wedges. So today I will explain about triangles. Okay, triangle is another continuation patterns that form as the price of stock hit a flat level of support or resistance and begin moving into a tighter consolidation range. So what are the difference between triangles and pennants? It look like almost similar, but what makes difference are the duration or the time frame during the formation of the patterns. Okay, for a triangles, we have three different type of triangle, which is symmetrical triangle, ascending triangle, and descending triangle. Okay, for a symmetrical triangle, we call it this pattern as a neutral pattern, as it may break out upside or downside. Uh, it's depend on the forces between the demand and supply. This neutral pattern is similar like a rectangle, if you remember that I explained to you during the last class. Okay, the symmetrical triangles will become a continuation pattern if the price break out the resistance, and it will become a, a bearish or reversal if they break out the support line. Okay, so it looks like almost similar like a pennant pattern. However, as I mentioned just now, what makes different is the duration. Okay, so the other patterns or the other type of triangle is ascending triangle. Ascending triangle is a bullish pattern. Okay, bullish continuation pattern. Okay, this ascending triangle, we can see that in order to identify the patterns, we can identify any flat line, or during this formation of pattern, we have a few points of highest point, similar highest point, and those highest points testing a resistance. However, they don't break the highest price or the resistance level. When we look into the lowest point, we can see that from point of time, it's creating, or the price will keep on increase and creating a higher low. Okay, so since ascending triangle is a bullish triangle, so once the price break out the resistance line, so it a confirmation of bullish. And if you want to enter the market, so we will enter at any price level above the resistance line. Okay, while for a descending triangle is a bearish pattern where chartists look for downside breakout. Okay, as you see here, this is the other way around of ascending triangle. So if ascending triangle, we can see a flatter or a straight line for the resistance line. For descending triangle, we will have a straight line for a support line, whereas the price creating a similar lowest point for quite some times. However, we can see that the highest point or the highest price keep on decreasing, or they are creating a lower high. Okay, so once the price break out the support, so this is a confirmation of a bearish pattern or bearish trend. So if you are already in the market, so you should sell or cut loss at this point. If you have an intention to buy or to enter into the market, it is not advisable for us to do that. Okay, So this is another example. We can see that where is the this is ascending. So this is a descending triangle. Okay, so this is another example. Okay, so as I mentioned, the main difference between pennants and triangle, first in terms of their time frame. Pennants are normally formed for a shorter period of time, typically extend for 1 to 3 weeks, and while for the triangles, the formation of triangle patterns normally for a medium and long term time frame. Okay. This one is rectangle. So rectangle is another continuation pattern. If you remember, I show you a Nestle chart. So currently they have or they're forming a rectangle or sideway. So this pattern is the easiest pattern to be identified, since we just comparing two of 2 point of higher price and 2 point of lower price. Okay, then we connect those higher price to creating a resistance line, and we will be connecting the lowest price to develop a support line. Okay, so rectangle also sometimes referred as a trading range or consolidation zone or a congestion area. Okay, so this is example of bullish rectangle, and this one is bearish rectangle, similar to the pennant, flag and wedges. So we also identify for a bullish triangle, we identify the pole, this is the resistance, this is the support. Once the price break out the resistance, so we can enter, and when we can set the target price as much or as higher as the flagpole. Okay, so this is another example of rectangle. Okay, okay, then we will have cup and handle. So this formation of cup and handle is a very unique pattern or unique continuation pattern. So a cup and handle chart is a bullish continuation pattern in which the upward trend has paused but will continue in upward direction once the pattern is confirmed. Okay, so the price pattern form what look like a cup, which is preceded by an upward trend. Okay, so for this cup and handle, it's normally we can only see this pattern for a medium to a longer time frame. As we mentioned here, it may take for several months to several years. Okay, so it looks like our tea cup. So this is the cup, this is the handle. So once the price break out the handles, so we assume that the price, or we can predict that the price will be going up. How much they will going up or how much they will increase, we will calculating by measuring the depth of this cup. Okay, so this is another example. Okay, so once breakout, so we can enter.